We have a brand new podcast. Visit myprivacy.help to subscribe. Did you know you can completely control your personal information without relying on a third party? Faris, Gordon, and industry experts explain how you can reclaim control of your data, your privacy, your life. Visit myprivacy.help.
I look at the macroeconomic environment and Bitcoin, and for me, it's like, this is why Bitcoin exists. This is why Satoshi Nakamoto foresaw some of these issues with the global financial system, in that it's unsustainable given the debt levels. Chancellor on the brink of bailout, second bailout. It was in the Genesis block, right? And so now we're seeing the similar things, except everything's kind of heightened, and the consequences are more dire now because the debt's higher. You got currencies of major developed nations acting like emerging market currencies now. And so in a lot of ways, I look around at the world and I'm just like, wow, this is thank the Lord Bitcoin exists, first off, because if it didn't, I don't really know what I'd be doing. I think I'd be probably buying gold or something.
Welcome to Bitcoin Basics with your hosts Faris and Gordon. Visit bitcoinbasics.help if you need help buying and securing your Bitcoin.
Hello, everyone. Welcome to another episode of the Bitcoin Basics podcast. We have got Faris and Gordon here, and today is the 4th of October when we're recording this. The price of Bitcoin is $19,550. You will get 5,115 Satoshis per dollar. The block height is 756,930. And Gordon, how are you doing this morning?
Good, thanks, buddy. It's morning, so that means we've interviewed another guest, but I'm pretty good. We interviewed Sam from Swan Bitcoin, and apart from being a nice, friendly, humble guy, obviously very knowledgeable about macroeconomics, which is why Faris was drooling the entire episode. Actually, I'm not sure if you were drooling, but yeah. He has a good insight into macroeconomics and what's happening. We talked about everything from CBDCs to Bitcoin and Swan and Spectre and all that kind of stuff. So very interesting interview. And even if you're not economically minded, we keep it fairly based for the layperson like myself.
Yeah, and in Sam's defense, it's not just about economics. He actually calls himself a Bitcoin analyst. He doesn't call himself, and even though he does study economics, and the way he came there is very fascinating. If you look at his LinkedIn profile, he actually was a physiotherapist for national sports teams in America, and then got into Bitcoin. So that was an interesting path. But no, this is an easy to follow interview, and we do talk about relevant topics happening today.
Excellent. So here's our interview with Sam from Swan Bitcoin.
If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself.
Oh, yeah. Sam, it's a pleasure to have you on here. And we've had quite a few people on, and we always like to talk about their Bitcoin origin story. Yours is unique in that you went from being a sports physiotherapist to Bitcoin. And that was something that I'm like, oh, how did that happen? Is the knee bone connected to the blockchain?
Yeah, no, it was definitely kind of a unique path. But Bitcoin's for everyone. Everyone needs digital sound money. And so I was studying business and in college for my freshman and sophomore years. And it was right around the global financial crisis. And I was kind of disgusted with what I was seeing there. I kind of already distrusted banks from lessons from my father. And I didn't like the corruption that I was seeing around the banking industry and Wall Street at the time. I was walking through, there was Occupy Wall Street, homeless people protesting, and here I was in business class. And then I would ask questions in class that kind of challenged the mainstream Keynesian view of economics. And I wasn't very satisfied with my answers, let's just say, from professors. So I thought it was stupid. And I was like, why am I doing this? And I was always interested in anatomy and physiology and physics. And so I switched majors in my sophomore year and ended up studying physics and biology. and ended up going into sports physical therapy because I was interested in how the body moved and more holistic medicine. And I wanted to make myself more useful, productive member of society, I guess. And so I did that, got to kind of where I wanted to be with that, worked with athletes at all levels. And then once I was finally done studying and I felt like I had some free time, I went back and studied the global financial crisis around like 2015. And I really studied financial history and central banking, kind of got discouraged because I saw these flaws and problems with the system, but didn't really see a solution. It was kind of like, well, they kind of captured the regulators. They captured the governments. Wall Street has so much power. I know it's a problem, but I just don't see how, we're going to change anything. So I kind of just let it go for a year or two. But then Bitcoin came on my radar. And so I immediately understood the problem that it solved. And so I was like, this is it. This is the thing that could actually help shift power away from these large banks and central banks and give power back to the individual. And I just had to be a part of it. And so after a couple of years of just studying Bitcoin, as you know, it's a pretty deep rabbit hole. I finally felt like I was able to maybe teach other people about it as well as work professionally in it. So I just did everything I could to make connections and get in the industry. And then Swan took a shot on me. And so fast forward a couple of years now and it's what I do. So pretty grateful to be a part of this. And why I do it is because I really think it's an important tool for individual freedom, which we'll probably talk about today. So that's kind of my story in a nutshell.
Wow, that's awesome. And thanks again for joining us today. We really appreciate your time. No matter how many guests we have on, it's always interesting to hear the origin story. And before we get into Swan and a couple of articles you've written, so straight into Bitcoin, a little bit of dabbling with XRP. And did you buy Bitcoin straight away? A lot of people sort of research it for a while and then buy it, or was it buy it and then I'll learn and figure it out later?
I was always attracted to Bitcoin from the beginning, just because of, like I said, I'd studied central banks and I liked the idea of decentralization and that nobody could control it. I kind of always knew that Bitcoin was the big deal, but I did get attracted to some altcoins for a couple months. It wasn't a long time, but I felt like I was a genius. I forgot which ones I bought. I bought a couple of them before the 2017 run up, and I thought I was an investing genius, and then saw those kind of disappear in the beginning of 2018. But I was always kind of geared towards Bitcoin. And so that kind of shitcoin phase, so to speak, didn't last long for me because I kind of just felt like they weren't that important. I felt like they were an easy way to trade and make a quick dollar if that's what you want. But for me, it was about fixing the money, the actual money. So for me, it only lasted a couple months. And then I was just full on Bitcoin, really from beginning of 2018 onwards. And so that's what I do now.
Awesome. Don't worry. A couple of months is pretty good. I think I was probably in altcoins for about a year.
Yeah, I feel like people have to go through it, right?
Yeah.
They got to learn.
You got to touch the stove and burn yourself. That's exactly. One of the lessons you got to learn.
Yeah, I think so.
So what is your role at Swan Bitcoin? I found that quite interesting. Do you want to just elaborate on what it is you do there, please, Sam?
I'm the only analyst there. So I kind of head our research efforts. And so I do a lot of the research for all of our shows, podcasts. Just in the background, I'm kind of always writing things or pulling up numbers for people on the team, kind of more long-term research projects. And then I do a lot of writing. So I help out with like all of our newsletters, kind of use that research to put it into prose. And then I focus on education and writing. So I write the monthly insight report for our Swan private clients, which is our more high net worth individuals or our entities that kind of sign on. We do a monthly research report for them. I do that with Tomer Strolight every month. I do a bi-weekly market update where I kind of just give it an overview of what's going on in the macro markets as well as the Bitcoin markets. And then I kind of help with the Daily Bitcoiner. I help with the monthly newsletter that we send out to over 200,000 people. And so, yeah, they keep me busy. I'm in content. I'm in research. And I'm technically a Bitcoin analyst, which I just kind of gave that title myself because I thought it was cool to be a Bitcoin analyst. They said like, hey, do you want to be a research analyst or a market analyst? I was like, no, let's do Bitcoin analyst. That's what I do. So yeah, man, it's good. It keeps me busy. Let's just say.
This is something I'm finding fascinating now, especially with what's happened in the Bitcoin ecosystem in the last 12 months is Bitcoin is now not center stage, but a key part of geopolitics and macroeconomics. Whereas, the 2017 era really was just quite a niche area. Whereas now we're just seeing, presidents, IMF, everyone talking about Bitcoin. The fact that, hey, this thing is here to stay. And this is one of the reasons I reached out to you was you wrote an article citing the crypto adoption index. And yeah, do you just want to give us a highlight of what your findings were on that? I found it interesting.
Yeah. So the Global Crypto Adoption Index is put out by Chainalysis once a year. And it's something I look forward to because it's probably one of the best measurements of where geographically we're seeing the most cryptocurrency adoption. And it's not just Bitcoin. They do look at other coins and stable coins, but it is mostly, I'd say, stablecoin adoption and Bitcoin adoption that is taken into account in this specific report. And so I looked into it and I just thought it was really interesting to see what were the top 20 countries in terms of its cryptocurrency adoption. As measured by this metric put out by Chainalysis. So they do like on-chain metrics. They kind of look at peer-to-peer exchange traded volume and all these other kind of on-chain metrics to determine where is the most cryptocurrency adoption happening in the world. And why I think it's interesting is because it shows that the most cryptocurrency adoption continues to take place in jurisdictions where inflation is raging, capital controls are the norm, and as well as financial instability due to incompetency at the government or central bank level. Those are the jurisdictions where you see the most cryptocurrency adoption. And it's, for me, that's what Bitcoin's all about. It's about helping these people survive who are in much more difficult circumstances than, say, an American like myself living with a relatively stable financial system and stable currency. Bitcoin isn't as needed, let's say, today in where I live, but it's very, very needed in other countries such as Turkey, such as Argentina, such as Lebanon, where they're really suffering, the citizens of those countries. And so it makes me feel good because that's where we're seeing the most adoption take place. And so it's kind of finding product market fit in these jurisdictions that have the most unstable currencies and unstable financial systems. And we can go into more detail, but that's kind of why I kind of dug into that report. It's something I look forward to every year. And then I just wanted to share my initial takeaways from it.
Yeah, there's something I actually do want to bring up about that, but just for the benefit of our audience who are not familiar with what it means, can you just explain on-chain analysis and chain metrics, please?
Yeah, so the thing about these blockchains, it's cool because it's all transparent. Like you can see into these protocols and see where kind of transactions are taking place. And it's kind of opposed to, say, the traditional financial system. Whereas if you want to look at, economic activity, it's really kind of survey based. So a lot of these economic metrics in traditional finance are based off surveys that are retroactively kind of, collected and then analyzed, and then they come out later. And so you kind of get an indirect measurement of economic activity. Cool thing about these blockchain protocols is you can see them in real time. Where these things are happening. So that's what it means by on-chain. You can actually see on-chain where activities and transactions are happening, and then you can kind of make inferences based off those. And so this metric looks into those on-chain things, as well as it looks into peer-to-peer exchange trade volume. So there's certain exchanges throughout the world where you can literally just exchange peer-to-peer without any kind of exchange or brokerage. You can just go to something like a local Bitcoins and say, hey, I want to trade Bitcoin with this one, random guy. And then you'll link up and then you'll actually exchange peer to peer. And so this measures on-chain metrics as well as peer to peer exchange traded volume. And it kind of is a combination of both those metrics, how they come up with this adoption. And so that's kind of what Unchained means. It's just kind of a fancy way to saying looking at how these transactions are moving on the blockchain.
Yeah, this is something. Oh, sorry. Go ahead, Gords.
No, that's all right. Lightning payments are not on chain. Is there any way to account for them in your analysis?
Yeah, I don't think they do it for this specific one that chain analysis points out, but you can look at Lightning metrics as well and see where those are happening. So that's another kind of separate. You'd have to look at that data, but it's not included, I don't think, in this one that we're talking about right now. But certainly, yeah, you could look at that data.
Yeah, because obviously and we've interviewed a few projects in El Salvador, Bitcoin Akasi in South Africa, and a few other projects, using Lightning. So obviously that's not going to show up, and there's no way to track that on chain. But it'd be interesting to see sort of the Bitcoin on chain versus Bitcoin Lightning or other layers adoption. Yeah, that'd be cool.
Yeah, it's interesting too, because I heard an interview with Obi, who is kind of leading Fedi now. But he said how, like, also these peer-to-peer exchanges make up a small percentage of the overall transactions happening in, say, Africa or these other countries, because most of it is truly peer-to-peer. Like, once they meet one person who kind of fills that need for them, it's like a relationship where they just say, well, you're my guy now. So it's always going to be on WhatsApp or Telegram or Signal, and that's not going to be picked up either. But a lot of these volume actually happens on there. So you got to take these metrics with a grain of salt. But I just like it because it's probably one of the more robust ones we have. But it's always taken with a grain of salt. It's always kind of an incomplete picture, but it's something to work off of. And that's kind of why I like it.
One thing I really found not surprising, but I enjoyed looking at was with the crypto adoption report that we're talking about. The top 20 countries, United States is included in that. It's in the top 10. And then with the exception of Brazil and Russia, every other country in there has actually seen their local currency just plummet against US dollar. And the DXY has just been on a massive run. How much do you think, I know it's hard to gauge, how much do you think this is a US dollar play where people are just, okay, I'll get into Bitcoin to get out of my local currency versus understanding Bitcoin, appreciating the potential store of wealth?
It's hard to tell, right? Because like I said, this includes both Bitcoin and stablecoins. And I think that stablecoins are actually a big part of it. See, people who have a currency that's being inflated rapidly compared to the dollar see the dollar as a safe haven, and understandably so. And so these stablecoins are more accessible for them, and they can use it to protect themselves against the inflation of their local currency, which is a lot higher than the dollars. So stablecoins are certainly a part of it. Now, I think a percentage of that is certainly people who understand Bitcoin, because Bitcoin is a little bit different, where you're going to have short-term volatility. And if you're somebody in Turkey who needs to pay monthly bills, it's kind of it doesn't make much sense to hold all your net worth in Bitcoin because of where we are right now in its adoption cycle, and it still has short-term volatility. Now, you also shouldn't have it all in dollars over a long, long period of time, because it suffers for the same inflation risk as that local currency. It's just happening at a slower pace. And so long-term, Bitcoin offers protection against that inflation risk, but you have to deal with the short-term volatility. And so there's probably a combination of both going on in terms of these jurisdictions with a lot of inflation compared to the dollar, where they're short-term going to the dollar, but long-term, they should really be thinking about putting their disposable income into Bitcoin, whatever they can after necessities, after, paying their bills. They should be holding their wealth long-term in Bitcoin because it's resistance against debasement, as well as other things like censorship resistance, which we could probably touch on in the future. So it's probably a little bit of a combination of both to answer your question.
Yeah, and that's something I actually wrote about recently, is that even though we're pretty flat with Bitcoin compared to price US dollar, it's rising more significantly against other currencies that are devaluing the US dollar. And this includes G20 currencies like the New Zealand dollar, where I am, the pound. You look at what's happened with the pound in the last couple of weeks. So we have seen that.
Learn how to buy and sell Bitcoins confidently and securely in our next online workshop. Visit bitcoinbasics.help/webinar for more information and to register. Learn about Bitcoin fundamentals, how to buy and withdraw Bitcoins, Bitcoin exchanges, Bitcoin wallets, private key management, and cybersecurity best practices. Visit bitcoinbasics.help/webinar, and we hope to see you there.
Now, one thing you mentioned earlier is that you're in the United States, and one thing I appreciate about American culture is you do have this aggressive investing culture. Some countries are very conservative with their culture, with their investing. They don't like high risk investments. If they're going to invest in anything, probably just gold. So with the United States, I think how much of that is people, because it's in the top 10. Where's that drive coming from? Is it coming from inflationary pressures we're seeing in the United States? Is it just coming from these large corporations like MicroStrategy? Hedge funds actually starting to pile in? Is it grassroots? Is it a different adoption in the United States versus these other countries of the world that we're talking about in that crypto adoption index?
Yeah, I would say it's kind of a mix where it's probably a blend of reasons why, somebody in the United States would go towards Bitcoin. I'd say compared to some of these other countries where this is more of a necessity, where you don't have to convince these people why Bitcoin's important because they, inherently understand it because they've lived through multiple currency devaluations. And they understand that, it's wise to have protection against that and how Bitcoin's scarce and can't be inflated and can't be seized very easily or can't be censored. When people live through that, they can understand it. But the United States, you have to convince people why that's important because they haven't lived through that. So I think there's more speculation on the price going up in terms of Bitcoin's adoption in, say, some of these developed countries like the United States. And that just makes sense. Now, at the same time, I would say that there is a reason to have Bitcoin in terms of an overall portfolio. If you're an American investor, is because you do understand those things and you understand that Bitcoin has different value proposition than, say, stocks or bonds, and that you're having a portion of your portfolio in there because it does offer, a money or an asset that is digitally scarce that can't be inflated away, that has a different return profile than, say, these other assets. So there is an understanding of that, but there is probably a little bit more speculation. And the other thing with the United States is, a lot of people understand that, Bitcoin, can be thought of as like freedom money, and it kind of aligns with the ideals of what America was founded on in terms of property rights and freedom. And that's, and so there's a lot of that in America as well. As people look at Bitcoin, they're like, yeah, this makes sense to us. This is what we want. We want to own our property, and Bitcoin allows that ownership to be given back to the individual. And so there is this kind of underlying theme where Bitcoin and a United States ideals are kind of aligned. And I think that's part of it as well. But compared to other ones where this is used as a necessity and it's a tool, there's probably more speculation on its price in America compared to those countries.
Having said all that, though, Sam, with Bitcoin killing babies and boiling oceans, are you worried about perhaps, I mean, they'll try and ban it. We know that they can't ban it, but heavily regulation, like, for example, okay, you can buy Bitcoin, but it has to be left on exchanges, or are you worried about those sort of non-freedom in terms of custody, Bitcoin custody?
Am I worried about it? Not so much. It would be pretty... Yeah, I like you can go back to like FDR when he confiscated gold ownership, but this is a little different. Like this would be tens of millions of Americans who hold Bitcoin today, basically confiscating their property, making it illegal. And so I think the odds of it happening are pretty low. Even if they do, what I'm worried about as an American is you can only ban yourself from the network, right? And so I'm worried about something like that happening more from a competitiveness with our competing superpowers, let's just say. I don't want us to see us fall behind as a nation and reject innovation, because the reason why we got to where we are today is because we embraced innovation. And so that's what I'm worried about in terms of ban. I'm not really worried about, it affecting the price of Bitcoin or it stopping it, or I think it would delay things. It would make things a little bit harder, and I would have to think about where I lived personally. But, for me, it's about setting us behind as a country. And it would be like banning ourselves from the internet while all the other countries embraced it. We would fall behind. So that's what I would be worried about from it. Now, I don't think that's going to happen. I think you see a push and more of an understanding in Congress and at the political level of what this technology is. And you're actually seeing it kind of go the other way rather than the whole banning thing. There is like another side of the aisle that is pushing that, but I see it kind of coming. There's both sides. And I think that we have the truth on our side. And the more people learn about this, the more they'll understand that a lot of these arguments pushed by people who think that it's boiling oceans, there's not really a lot of data or facts to really support those narratives. So I think the truth kind of eventually wins out.
Oh, absolutely not. I say that sort of as a devil's advocate sort of question. And I'm super positive, but I think they will try and ban it. And maybe not in the States, but I guess from my point of view, the worst case scenario would be a sort of an over-regulation of, you can buy Bitcoin, that's fine, like a PayPal sort of thing. You can buy Bitcoin, but you can't withdraw it from that exchange or that particular financial service. So you've got a lot of Bitcoin left on exchanges and not in hardware wallets. That would be a bad thing.
Oh yeah, no, I hear you. And that's why we always promote self-custody. I mean, this is kind of going into this is why we just made that acquisition of Spectre Solutions, trying to make it easier for people to take self-custody of their coins and give them products and tools that they need to use Bitcoin in a sovereign way. That's why I think like even a ban like that, like it won't stop people from doing it because the ease of taking self-custody, it's so easy compared to say gold or some of these other assets. And then the digital nature of it, it's so easy to move across borders. And how do you even enforce that ban? It'd be very difficult. So,
But again, without being a dead horse, if you're in the States, for example, you're buying your Bitcoin from Coinbase, maybe in the future you won't be able to withdraw it from Coinbase.
Oh no, yeah, for sure. That's I think we might be down that road. But that's why I think there's a race between Bitcoiners and regulators and governments to build the tool. Bitcoiners need to build the tools and infrastructure that allows people to take self-custody as easily as possible. This is it's paramount right now that we just continue to build and make that UI and UX easier for the average individual. Because in my opinion, taking self-custody is still a little bit there's too much friction, like my grandma to do it. But I think it's improved dramatically over the last couple of years, and I think it'll continue to get easier. So I think you're right. I just think we'll outbuild them and outmaneuver anything. Yeah.
Yeah. And one thing I always have a bit of a smirk, and I don't know if this is just history being serendipitous, but, the white paper came out in 2008 when the financial crisis was coming through, the Genesis block 2009. And this little thing, governments were so busy at the time bailing each other out, bailing out, what you talked about before, the corruption in the financial industry, that they didn't have time on their radar for Bitcoin. And now where we're seeing nation states adopt Bitcoin as legal tender, as a reserve monetary system, there's so much else going on. America's coming up on the midterms. We're fighting inflation. We've got a war. I think, again, this is where if governments unite, okay, we need to do something about this Bitcoin. There's too much going on. I think they might just have to put it in on the, back of their minds for a little while. So I kind of smirk and think this is quite handy that this stuff tends to happen as Bitcoin hits these new levels of the network effect.
I also think they're laser focused on stable coins. They're worried about stable coins more than Bitcoin. Because they think it threatens their dollar.
Yeah.
Monopoly more than Bitcoin. So they still just think Bitcoin's this like speculative thing that's going under their radar. And so I'm pretty bullish.
Which is great.
Yeah, which is great.
It's great. I love it. Now, Faris has done a very bad job as an interviewer. Next time I'll take over Faris. No, only kidding. You mentioned Swan, you mentioned Spectre. What is Swan Bitcoin for those who haven't heard of it? What is Spectre? Swan Bitcoin just recently acquired them.
Yeah. So Swan Bitcoin is
maybe just go through what is Swan Bitcoin.
Yeah, we're just like an international Bitcoin financial services company or a brokerage company that focuses on providing all kinds of products for high net worth individuals. We help people buy Bitcoin in their IRAs, trusts. We just launched a product for financial advisors to get Bitcoin on their balance or for their clients. So we kind of just offer a full suite of services for Bitcoin. We allow people to gift Bitcoin to other people. We do all kinds of different things. And part of the things that we wanted to do better was provide more self-custody solutions. And Spectre is one of the most respected wallets, and multi-sig. Multi-signature is just the ability to hold multiple keys for your Bitcoin. So it's just like added security for anyone who doesn't understand that. But Spectre was a really good multi-sig wallet, and they're really respected in the industry. And so we wanted to provide more self-custody solutions. These guys were already doing a lot of the work. And so we kind of align with our mission and our values. And so our leadership at Swan and at Spectre just thought it would make sense as a partnership. And so Swan acquired them. And, our CTO and our product team and engineering team are now meeting with Spectre. And I think they're going to build some great things for Bitcoiners and for all of our clients. So it's exciting. It's going to be really great.
Yeah, I'm really impressed with Spectre, and we've used it in the past for multi-sig custody solutions. And without going into it, people can check out Spectre. I'll put a link, and it's really good. And it's got my vote because it's open source. So that's the number one thing.
Yeah, and that's one thing about Swan. Like, we did want to make it clear, like, it's going to remain open source, and we're still going to adhere to all of those values of keeping it open source. It's not going to be like under this corporate umbrella or anything like that. That was just an important caveat that I wanted to say, because there's some chatter about that.
Yeah, right. Okay. Now, I won't ask you too many questions because I've probably got about 50 questions to do with Spectre, but I won't. Swan Bitcoin is still US only, or are you guys branching out internationally?
Oh, no, we're international. Yeah. So we service clients all over the world. Yeah.
Awesome. So if someone today is listening to this, you've got a little Bitcoin or you don't, and you want to buy Bitcoin, you don't put, your life savings into buying Bitcoin in one shot, DCA. And Faris and I have talked about this a million times. We'll link. We've actually interviewed Reed.
Yeah.
Womack, is it?
Yeah, Reed Womack.
Yeah. From Swan. So we'll put that episode in where we go through DCA and how to do that. Thanks
for the reminder, Gordon, to get Sam talk about Swan Bitcoin, because it's one of those things. We've had Swan Bitcoin on our radar for a long time. Interviewing Reed, just last night I interviewed Suli, who was a Swan Bitcoin affiliate educator in the Middle East. So it's one of those things where we are very familiar with Swan Bitcoin, but have to remind ourselves that some people might be tuning in for the first time. This is something we really respect about Swan. Is it's unusual that an exchange will basically say, all right, buy Bitcoin, I'll get off our exchange. That's not common practice in crypto world.
Yeah. It's something we're super passionate about. Like, I wouldn't be working at Swan if we didn't have that policy in place, or that mission to get people to use Bitcoin in the proper way, which is the proper way to use Bitcoin is to buy it and then hold the private keys yourself. You don't want to trust anybody else. That's kind of the whole point, is to take self-sovereignty of your wealth. Swan was, we have no withdrawal fees like some of these other exchanges. We have thorough education resources available to teach people. You can jump on the phone easily with a Swan rep to talk you through self-custody. And now we're hoping to build an end-to-end solution with the acquisition of Spectre to make it even easier. And so it's really important to us. And then we do think that the best way for a majority of people to get access to or exposure to this asset is through dollar cost averaging. That's another thing that I was really passionate about. I think it's the right move for a majority of people. This asset is volatile and people are emotional, and it just can get really stressful when you're overexposed, and you can make very emotional decisions that you regret in the future. And so we recommend Bitcoin savings plans. Buy whatever you feel like is okay once a week, every week, and just let it go. Set it and forget it. Go outside, relax. You're taking you're you're buying Bitcoin and you're taking self-custody, and we actually allow you to do it automatically, to automatically withdraw it to your hardware wallet or whatever self-custody solution you have. So we try to make it as frictionless as possible and as easy as possible, and to use Bitcoin in the proper way. So that's why I work at Swan. I personally think that's the right move for a majority of people. So
it's such a good, sorry, Faris, it's just such a good way to acquire Bitcoin, because I know it sounds simple and okay, yeah, whatever, but completely opposite to leaving money in your bank, say putting some of your salary into the bank. Bitcoin is a forced savings. It's like, yeah, the price might be going down, but you're just putting a little bit in every month. Eventually, well, we believe anyway, that the value will go up. So it's such a simple thing, because in our society we've been completely mystified in terms of savings. Like, why would you save? You're just throwing money away. Inflation's rampant. So super simple, but I don't think people actually grasp the power of Bitcoin as like a savings asset. Just put a little bit of money in every month.
I don't think so. It's Bitcoin is saving. It's hard for people to understand that it's a savings technology. That's really what it is. And even if it's probably not just that. Like, I think it's going to be a lot more than that in the future, as it becomes a protocol with multiple layers of functionality and efficiency and trade-offs. But even if it didn't become that, and it was only a savings technology, a decentralized store of value, it would still be incredibly useful for so many people around the planet. And that's why I think it's important.
Oh, yeah, we've talked about this a lot, the fact that this is the first time you've had a financial service that can be automatically provided to the 2 billion unbanked adults around the world, or more than that. Half the world's adult population is unbanked, and there's more mobile phones than people. So it is incredible. One thing I wanted to ask you, actually, because we recently helped a customer of Swan Bitcoin. They just need some assistance with moving their Bitcoins off of Swan and into a cold storage device, and it wasn't an immediate process. By the time they wanted to remove their coins, it took 3 days. Is that common practice? Because are you putting the private keys somewhere else in custody, or what's the process there, if you're allowed to talk about that?
Yeah, well, when you initially, we use Prime Trust to actually buy the Bitcoin. And so when you initially buy it for the first time, it's held in deep cold storage in a institutional custody solution, Fireblocks. Okay. So it's in deep cold storage, and when you want to withdraw it, it just takes time for them to move it out of there and then put it into a hot wallet where you could actively withdraw it. And then a part of that wait time, and I know it can be annoying for the user, but it's actually protect against fraud, because the worst thing that can happen for our brokerage is your coins get stolen from you because of some reason, right? So we find that if you delay it just even a few days, for a nefarious actor can't pretend like he's you and then withdraw the coins automatically, because if somebody gets a hold of your account, that's what they'll do immediately. They'll just immediately try to withdraw it. They won't wait for 7 days if they have access to your account. They'll try to do it right away. And so a lot of the lockup times for withdrawals right in the beginning is to protect against fraud. And that's kind of the most important thing to prevent, because we can't get it back. Like when Bitcoin's sent, it's gone forever. There's no take backs in Bitcoin. And so that's kind of from our higher up, our fraud team, as well as our CTO thought that was the best way to go about that. Yeah, it's a little bit more annoying and like a friction for our users, but we honestly just have their best interests in mind. And I think the results show for themselves, because we haven't really had that much fraud at all at Swan. And that's really just because we take these proactive, policies to protect our clients. So that's kind of where it comes from. It's both technical, from getting it out of deep cold storage and getting into a hot wallet. And then there's also kind of self-imposed Swan wait times just to withdraw, just because of the fraud protection.
Yeah. And one thing I appreciate is people in the crypto sphere will think 3 days is a lifetime, whereas that's pretty average for Swift and what most people are accustomed to.
Yeah. And it's honestly, it's mostly like the first one. So it's something that we get asked a ton, because Bitcoiners really, they get super annoyed by it. And they're like, why, you're not letting me withdraw. But really it's their best interest at heart. And we don't do anything with the Bitcoin. We hypothecate it. It's another difference between Swan and these other exchanges. It's held in a trust under your name. You have legal rights to that actual Bitcoin, where it's not just like an IOU on a screen where they're taking it and rehypothecating it. So we're not doing anything with the Bitcoin, and we would love to just be able to allow you to take it right away. But, it just makes sense from a risk or compliance standpoint to.
Because that was my follow-up question. What's the counterparty risk there when Swan is using a third party?
For Prime Trust?
Yeah.
Well, there's always like the fact that we have Prime Trust on our back end, there is a little bit of a counterparty risk there. But that's just kind of the nature of the business, where you think we have a great relationship with them, and we know that they're using the top institutional grade custody solutions with Fireblocks. That's what Fidelity uses. That's what all these big institutional investors. But this is why there is some counterparty risk there, which is why we just say get your Bitcoin off Swan. This is why we're like, you buy it here. We don't want you to hold it here long term. We want you to automatically withdraw it directly to your self custody, because technically there is a little bit counterparty risk. And that's just like the nature of business. Now, do we think that party is very strong? And yeah, we do, because we speak with them every day, and I think they're one of the best businesses in the business, custody solutions in the business. But yeah, get your Bitcoin off Swan. That's why we recommend it.
Absolutely, and I actually would prefer it for someone like Swan or whatever to have a third party custodian, because that's their core competency. Like, that's all they do. They just store the Bitcoin safely and securely. It leaves Swan or other businesses to do what you do. But if you're doing both, then it's kind of like, well, are they going to stuff it up? So
there's trade-offs, right? It's exactly right. That's
absolutely.
What we do. And if we wanted to build our own custody solution, we better get that right? And are we going to build a better solution than somebody whose core business is that, who's been at this for many years? Like, probably not. And then it goes back to open yourself up to attacks, right? Mm-hmm. So if we lose the Bitcoin and we're holding it on Swan's custody solution, it's gone forever. So it's kind of like, as a small startup, it made sense rather than building it out, because you take on all that added risk. And I'm probably talking like outside my personal expertise. Like, I would love talking to Jan, our CTO, about this. So hopefully I'm not saying anything too bad. Well, that's what I think.
All right. Well, let's get back into your expertise. Are you sick of talking about CBDCs, inflation, what's happening with the Bitcoin price?
Not really. That's kind of what I like to do is talk about these things, the developments going on. I look at the macroeconomic environment and Bitcoin, and for me, it's like, this is why Bitcoin exists. This is why Satoshi Nakamoto foresaw some of these issues with the global financial system, in that it's unsustainable given the debt levels. Chancellor on the brink of second bailout. It was in the Genesis block, right? And so now we're seeing the similar things, except everything's kind of heightened, and the consequences are more dire now because the debt's higher. You got currencies of major developed nations acting like emerging market currencies now. And so in a lot of ways, I look around at the world and I'm just like, wow, this is thank the Lord Bitcoin exists, first off, because if it didn't, I don't really know what I'd be doing. I think I'd be probably buying gold or something. But yeah, so it's an exciting time. It's also kind of a scary time. You don't want to be right about these things. But this is kind of a lot of the outcomes that Bitcoiners have been warning about for many, many years now that we're seeing unfold.
Yeah, with that, so this is actually a question. So Gore's brought up. I was going to ask you myself. Central bank digital currencies. Now, we go back to 2016 in India when they announced that they were taking the two largest denominated notes out of circulation. You had 2 weeks to turn them in. At that point, they were illegal tender. At that stage, we actually saw Bitcoin go for a 20% premium on exchanges there, simply because they were moving cash. We're starting to see the same thing, and I think every country at this stage has expressed an interest in setting up a central bank digital currency. Is there not that, hang on, guys, this is something serious. We're seeing what's happening with CBDCs in China. Why is there not that mass move that we saw in India go into Bitcoin? Is that not happening? Do people just not really appreciate what a central bank digital currency is? Like, to me, I'm kind of a bit flabbergasted that those dots aren't being connected.
Yeah, I don't think the education's there around what central bank digital currencies are. I don't think a lot of people even have heard that term or know what CBDC stands for. I also think it's just early. I think a lot of these central banks, like 95% of GDP, 109 central banks are piloting or experimenting or researching central bank digital currencies. Only China is like even close to being ready to implement one in reality, full blown into their entire economy. They're doing pilots at different cities, but it's far off. I don't think people have understand the risk of CBDCs. I think it's still just very early in the research, and so you haven't even seen it talked about that much in political circles. Even there's been a couple hearings even this year and last year in the United States, but it's just starting to become a topic that's discussed openly. Like the Federal Reserve just this year released their first white paper on it, official white paper on it. So I think it's just early. I think that is the path. That's like the antithesis of Bitcoin as a decentralized money. A CBDC would actually just centralize the banking industry even more to basically one central bank or one global ledger. And so it's kind of the opposite of what you want compared to Bitcoin. And so those are like the two futures. And I think eventually people will understand Bitcoin's value proposition because they'll understand why CBDCs aren't good for lots of different reasons that we can get into. But
there's a massive lack of understanding too. I talked to a couple of friends recently, and they're pretty smart, and they think, well, no big deal. Everything's digital nowadays. And, of course, I've gone through the whole thing about, well, actually, it's completely different because I can see every transaction, blah, blah. But even people in economics sort of don't understand the implications of having a central bank, essentially a database. It's not a blockchain. Every single transaction, programmable money, being able to control it, being able to censor it, freeze your account, donate to the wrong political party, whatever. And yeah, so even amongst those people, there's still a massive lack of understanding about how that could affect, because it's a wet dream for a central bank. I mean, they must hate commercial banks, always having to go to the commercial bank. What's this person spending their money on? There's this massive friction between them and the actual consumer.
Yeah. And from their perspective, I've always thought it's easy to paint these guys as like have a evil agenda, right? They want to create a surveillance state. And, maybe there are some bad actors like that. But I think for the most part, these are good people that are just don't see the flaws in their plans. But they look at a CBDC and they're like, hey, we're going to improve the efficiency and reduce the cost of the payment system. We're going to encourage financial inclusion by getting more people, especially the poor, access to dollars. We're going to facilitate cross-border transactions. We're going to be able to do more efficient monetary policy, targeted monetary policy. It's going to be great. But they don't think about what's the consequences of their actions and the risks that are involved to individual privacy, like you kind of mentioned, and how this tool can be used against its populace by an authoritarian government or even a benevolent government, if that exists. That could use it to implement social agenda instead of monetary policy. So you could basically target people. And it's not hard to see how that could play out. We just saw like the Canadian trucker protest that happened, and that woke people up to these risks. They're like, wow, this could actually happen. Well, with the central bank digital currency, there would be a lack of exits if everybody had it, right? So a lot of them say that they're going to complement cash, but with a CBDC. So cash will still exist and we'll be able to use the CBDC. But in reality, if you read all their papers and stuff, they're building out a CBDC because they think cash is no longer going to exist in 10 to 20 years. And so CBDC will be the only thing that you can get. And so if you get cut off from that financial system, well, you'll learn pretty quickly that your life gets very challenging when you can't access you can't pay for anything. You know, that's the power that they would be able to have. And if you do one thing that's against the narrative or kind of like a dissident acting against the government's agenda, they could cut you off with the click of a button with the CBDC. So it's dangerous, and I think we should highlight those risks so that people can better understand it, because I think it would be a future that we don't want for our kids, and I have nieces and nephews. I don't want that future for them. And luckily, Bitcoin exists because they might get rid of cash, but now there's this alternative digital sound money that they can't stop. And that's the two futures that I see. It's a CBDC future and a Bitcoin future. And I think that most people will eventually pick the permissionless, open protocol that nobody can control versus the surveillance protocol that can cut you off with a click of a button. That's just my personal opinion.
Absolutely. And I'll ask one more question before Faris jumps in. We had, and this was maybe a couple of years ago, we got CBDCs, we got Bitcoin, and they were sort of diametrically opposed, centralized, decentralized. But then we sort of went through this Facebook, Amazon. Like, why do you think they're Amazon coin? Why isn't there a Facebook, whatever? What, that was all the rage. What happened to that? It seems nothing's happened with that now.
Well, actually, so when you read the CBDC research, that Facebook coin is what lit a fire under them. They got freaked out by the Facebook coin because they knew that a large platform like Facebook with billions of users could easily create a network effect that could take market share from them, essentially. So this is why you started to see hearings and the CBDC research from all these central banks exploded after the Facebook. Now, I think it has to come to, there's regulatory concerns around a permissioned blockchain. I think Facebook got a lot of pushback from regulators about that. And so that's part of the reason why you haven't seen these coins. I don't think they want to piss off the regulators, especially because they're going through their own like antitrust hearings around that same time too. So you've seen it kind of quiet down in terms of the permissioned stable coins coming out of these tech companies. But a lot of these CBDCs as well, they're worried about the rise of fintech. It's not just crypto. It's not just stablecoin. It's not just Bitcoin. They're worried about how fintech, citizens of these jurisdictions are starting to use it more as money than banknotes that are issued by the central bank. And they're worried they want to get in on the action. They don't want to be left behind from fintechs. That's why these CBDCs are getting pushed so hard, like the digital euro, is because they're afraid of the market share of fintech companies, like a Facebook, being able to take market share and control ultimately from the central banks. So I think you probably will start to see more of that. It's hard to tell. You just haven't seen much of announcements from an Amazon or Facebook about their plans of a stable coin. You'll probably see more of it though in the future, I'd imagine.
Yeah, that's going to be an interesting space to be a part of because, the Libra project, like you said, just made big headlines and it scared a lot of people. Sorry, Sam, I know we're running short on time here. We really appreciate having you on. One last thing I want to ask, and this is something we try to ask all our guests, is the problem with Bitcoiners is we tend to live in this echo chamber and there's a huge knowledge gap. We're talking about Lightning Network. We're talking about all these new things that keep popping up on Bitcoin, whereas the average consumer, Bitcoin's still a bit of a misnomer. What are the hurdles to Bitcoin adoption? Some of the myth busting you still have to see today, 2022. What's some of the stuff you still have to come across where, we're here, but the consumer is way back here?
Well, the energy FUD's always kind of top of mind because I think it's the easiest one for critics of Bitcoin to poke at, even though there's a ton of flaws in that thinking. So I think it's a combination of not understanding how the energy markets work and then not understanding how Bitcoin works, where that can be a holdup for people. So I think that's definitely something that we'll just continually have to kind of educate people about and understand that like energy use in itself isn't a bad thing. And that it's worth every watt to have a money that's not controlled, that can't be censored and can't be inflated away. And so, and then a lot of it, that goes back to understanding the problem that Bitcoin solves. Like a lot of the times people just don't even understand like what inflation is, like the financial literacy around the world. They don't understand what's happening. All they understand is that, wow, my paycheck's not stretching as far as it used to. Whoa, the grocery store, that these prices are crazy. They don't understand that that's not like a natural phenomenon. That's a policy decision to inflate. And their savings are melting away. And so once they understand that, and they understand that purchasing power is permanent, loss of purchasing power is permanent with fiat currencies. It'll never come back. And so your savings are being devalued permanently. And so once you understand that, and you're like, well, how do I protect myself against that? Okay, well, there's this thing called Bitcoin. So I think that's a big knowledge gap, is just understanding the problem. And then I think as currencies continue to, Bitcoin is a function of the environment that it's in. And the environment it's in right now is chaotic. And what I see is the traditional financial system is what's chaotic. Bitcoin's policy is actually very simple, and it hasn't changed, and it won't change for its entire existence. Like we know it, it's programmable. We know exactly how much Bitcoin is going to be tomorrow, next month, in 100 years. And so it's actually very stable compared to the traditional financial system. And as we see these big currencies start to lose value rapidly, and them continually have to do quantitative easing or print more money, and for lack of a better word, that's going to continue, and that's going to get worse. And I think that more and more people will just understand that, because they'll have to look for something to protect themselves. And, once currencies devalue, what comes soon afterwards is more capital controls, as central banks and governments try to trap their citizens in the devaluing local currency, because if they are looking for other options and alternatives, it makes their monetary policies less effective. And so what they'll try to do is they'll try to prevent you from getting into dollars. If you're not an American, they'll try to prevent you from getting into Bitcoin. And I think once you see that, more censorship, more currency depreciations, more and more people will wake up to Bitcoin's value proposition. Unfortunately, a lot of people will just have to learn through getting burnt, rather than somebody like us saying, hey, this is important, you should look into this. And I think that's just like human nature. So hopefully that answered your question, but
Oh, no, absolutely. And Sam, for people listening in who want to follow your work, where can they find you? Where are you active?
So I'm at swan.com. I write a lot of the blog posts on there. You can find a lot of my work that's written in newsletters that get reposted on that blog. And then I'm always on Twitter, sharing my thoughts, sharing my charts and analysis. So you can check me out at Sam Callahan, SamCallah. And that's pretty much where you can find me. I'm on Twitter a lot.
No, thank you very much for coming on. I know we really appreciated it. And we'll catch up again next year if you don't mind, because between now and then, who knows what's going to happen to world Bitcoin.
Yeah, you guys, thanhanks so much for having me on. Like I've listened to a few of your shows in the past, and I think it's super important to have a Bitcoin basics podcast for beginners. That's kind of not full of jargon and outside the echo chamber, let's just say. So I really appreciate you guys having me on and for what you guys do with this podcast.
No, thank you. Appreciate your time, and really appreciate it. And that's 1 + 1 listener, Faris. We're getting up there.
Go. Thank you, Sam. It's been a pleasure.
Thanks, guys.
Thanks, Sam. Cheers.
Thanks for watching or listening. If you enjoyed this podcast, please like, subscribe, and share so we can spread this educational content to others like yourself. Visit bitcoinbasics.help.
Disclaimer. Any content provided by CoinCompass is for educational and informational purposes only and is not investment, legal, tax, or any other professional advice. A qualified professional should be consulted before making any financial decisions. CoinCompass will at times recommend certain products, services, and technologies, but these are opinions based upon our own or podcast guests' experience and not endorsements. We take no liability for out-of-date or inaccurate information, software bugs, manufacturing errors, technology misuse, or issues involving third parties. Visit coincompass.com for more information and please contact us.